Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have a very special guest for you today. He's an expert on verification solutions in financial services. He has a wealth of knowledge and expertise. Please help me welcome Joel Rickman, Senior Vice President, Verification Services at Equifax Workforce Solutions. Joel, welcome to the show.
Wow, Michael, what an enthusiastic introduction. Thank you so much. I'm delighted to be here.
Well, it is great to have you. You have a wealth of knowledge and experience. So, Joel, for our listeners who maybe don't know your background, tell us a little bit about your background and how you got into financial services.
Well, Michael, I've been supporting financial services. Let's not give it a year. It's a lot more years than I'd like to admit. But I actually started on the technology side of the world, and have had the privilege to work for organizations that let me work with some of the largest banks, not only in the United States but also in Australia, the UK, and Western Europe. So it's been a long career with a lot of excitement, and I've had the opportunity to see so many things happen in financial services as lending rules have changed, as we went through the mortgage crisis a little over a decade ago, and we went through HAMP and SPOC and all of those key fund terms that everybody had to work with. So it's been a number of years in the making, but everything that doesn't kill you makes you a little stronger, and hopefully prepares you for the next challenge.
Absolutely. Well, you have a wonderful background, so let's kind of start diving in. One of the things that with your background I'd really like to probe a little bit deeper is how can lenders address more financial inclusion in mortgage lending?
Well, that is definitely one of the hot topics today, and across the board, I think we've continued to try to do this for years, and after the last crisis that we went through, the mortgage meltdown per se, a lot of rules changed, and that was for the best. But as those rules changed to help make sure that lenders and the overall ecosystem was protected, it did start to make lending a little more challenging for parts of our citizen makeup. And so with that, we see that that's starting to change. There's a lot of different programs coming out now, but one of the quickest ways is just having the automation and access to data. So in today's world, there's different programs and different loans for all types of credit background individuals, and for those that are improving. But the thing that always is a constant is you have to be able to prove you have the ability to pay back that loan. And so instant verification of income, instant verification of employment, obviously what I work in, is one of the backgrounds that allows lenders to help realize if they're going to be able to help that that borrower get into that loan, and help them work through some of their credit challenges or other things that might be preventing them from getting approved day one.
Well, and I think that access to data and direct data sources is critical as we continue to move forward in the mortgage industry and trying to provide insights to lenders so that they can make better and more informed decisions. As we talk through this topic, what can lenders, what work can they do with today's demographics of the borrower with low and non-existing credit scores? What are some of those things that they're battling, and how do we overcome them?
Well, it's one of those things that the last couple of years we've been very, very focused on getting the loans that could be done quickly, the refis in the space, and with the battle to get properties purchased, it's unfortunately rolled up to the very best credit worthy. But there's always been programs out there through some of the government agencies and such that will allow it to happen. The key is having your data together. But one of the things that excites me specifically that's recently been announced by one of the large backers is the ability that they're actually going to take that history of making your rent payment consistently and being able to apply that. When you take that information with a thin file, with a proven track record of income and employment and a tenure, you start to see someone that absolutely qualifies for a mortgage, and you start to bring up that individual to creditworthy and be able to put them into one of those programs to get them into that house. And that's what's exciting. It's very seldom one data element that gets you there, but that combination of being able to get rental income, that combination of the income from the individual and how long they've been at that job, overlaid with some of that credit history, there's a lot of programs to help get people into that house now.
Well, and I think those programs are so very critical, as you talked about, especially for someone who has non-existent credit scores, right? But they're making their monthly payments, they're making their rent payments. Being able to analyze that data and make a better and different and probably a more informed credit decision is critical to get those people into homes and into housing.
It absolutely is. And, one of the things that we're seeing change kind of across the board, Michael, is not just in mortgage, but in some of the fintech space and consumer finance world, where consumers do have a thin file or no file in credit. The use of technology and verified information from other sources is allowing lenders to look at customers with a different risk profile. So there's a number of our fintech customers that will generate loans and help a customer build a creditworthiness with just proven income, and be able to do that off of the work number data that we provide them. And that's a change that we're starting to see in the industry, where you do have clients or banks that are financing people with different methods or mindsets. We're seeing that not only in the fintech world, but we're also seeing the big banks that now that this type of data is digitally accessible for a much larger part of the population, they're able to build this into their criteria in a positive way to help pull people up, if you think about it from those lines, into getting into that line of credit that they may not have qualified for with just that thin file by itself.
Oh, great insights. And I think, as you mentioned, it's vital to be able to have access to that data so that people can make those decisions and provide those opportunities. So we're talking a lot about data. We're on the FinTech Hunting podcast, so we obviously like to talk about technology. So how can lenders leverage technology to stay competitive as the housing market continues to shift, and the customer expectations shift, and in some ways kind of are going through the roof? I always apply, it's the Amazon effect. If I want a new book, I order it, and, for the most instance, I'm kind of pissed off if I don't get it today, but my expectation is I better have it tomorrow.
Well, you have definitely nailed on one of the changing aspects of the space. So I'm going to step back over to the fintech personal loans, and then I'll come back to mortgage. In the personal loan space, you're exactly right. As the fintechs have grown over the last few years, it's based on that convenience. I had one client refer to it as, we want to be able to approve and issue that loan while the fingers are still on the keyboard or the thumbs are still on the phone. So they want it to be that instant. And so your question about technology and tying that together is critical. And you're seeing the same thing inside the mortgage space. As we look at some of the numbers and the performance, you can see that the conversion rates where digital information is available is much higher than those where it is not. And we study that type of information on a regular basis so that we're understanding it. But in the auto space, for example, if you're a thin file or subprime borrower, we know that you have a 40% better chance of getting approved while you're in the dealership if you have digital income and employment information available with you.
Wow.
For you. In the mortgage space, your odds of getting approved are going to stay more consistent, but it's who's going to win that loan. And so your question went back to what are lenders doing or how are they differentiating? It really is coming down. The battlefront is at the time of application. And as a lender, your ability to know that you have the data elements that are required to bundle up that loan and give a high quality, firm offer of credit that someone can accept quickly keeps them from going to the next website and the next website and the next website. If they have to wait for a few days to get that initial answer, or they have to upload a lot of documents, they'll often try a couple of other websites or lenders to see if it's easier before they commit to that much work. And so that transition of the consumer based on, we'll refer to it as the Amazon effect that you were referring to earlier, is absolutely coming into play more and more in the financial services space. And so the simpler you can make it for your consumer and potential customer to get the information needed for you as a lender to make that decision and verify and commit to that loan, with them providing the least amount of data possible, increases your odds of conversion much higher.
Well, and I think you mentioned so many important points there. We talk about it's at the point of application where the battle really has to begin. The lenders that do it better, whether it's in mortgage, whether it's in other financial services, that's the critical moment. So having access to the data, being able to easily use that data to make informed decisions is critical. But then you also talked about the ease of use. Touch upon that a little bit more, because I think we hear this all the time. Oh, we got to improve the borrower experience. We have to improve the borrower experience. But I don't know if people really understand, what does that mean, and what are some ways that we can actually improve that borrower experience?
Well, if you just put yourself in the borrower's shoes, which, I've gotten a few mortgages over my life, I'm sure you have as well. I remember the first one, it was, I felt like I remember I actually had to pay. I'm starting to show my age. I had to pay at a copy machine like 15 cents a copy to make copies of my last 3 or 4 pay stubs, my wife's last 3 or 4 pay stubs, my bank statements, a bunch of other information, which that took a lot of our time. We had to get that information. We had to go make copies. We had to bundle it up. We had to make 2 copies so the broker had one and the lender could have one. That was a lot of work. Now, we've gotten so much better than that, so I'm not stating that that's the world today, but there's still that caveat that if you don't have that information, you have to be able to log into all of your websites and be able to get that information and download it and convert it to a PDF and then upload it into the loan application. And that takes a lot of time for the consumer. On a mortgage, some folks will spend some of that time. Others will still, as we talked about, they're starting to shop around. And there's some great platforms out there technology-wise that are solving that problem, and you're seeing them adopted across many lenders because they improve that customer experience. And then there's some of the big lenders that have done a really great job of developing that technology themselves, but those are the ones that are looking to differentiate themselves at the type of application. We're also seeing them use that technology and approach to really streamline the closing process. I don't know about you, but I have had a loan that slid past the close date that it was supposed to because not everything got pulled together. I think it was a flood letter, actually, that we were waiting on that time, but it slid past, and that's inconvenient. You've got to reschedule. The lender has a number of things they have to do on their side, and that takes a lot of effort. What we've seen is a number of lenders now automating that closing process from an employment verification process that 5 days before that loan's supposed to close, they're automating that process to where their system is pulling that verification of employment, digitally putting it in those closing documents and having it ready to go, and the loan officials never have to touch it. So they get so much efficiency back in their day. If we can resolve that digitally for them, they can focus on making sure they have the rest of the documents in place and coordinating with the borrower to get everything done on time.
You give some great examples there, and in the midst of all of this competition, the pressure to compete in a larger market space, customer expectations, as we've talked about, have kind of gone through the roof. How can the Work Number help alleviate some of that fatigue and burnout on lenders?
Well, it's a great question. I think it goes back partially to the last answer, but it is very much around how much can you take off of the plate of the individuals. Every business, the most valuable resource is the individual that is working for you. So the underwriters and your quality assurance agents and everybody that's touching that loan folder is critical to your process. But the more you can simplify their job and get the right information to them from a verified source, you simplify what they have to do, and they can focus on the problems versus maybe the minutia of pulling together each one of these documents on a regular basis. So we help them from the automation point of view. We also help from the compliance point of view. There's always stories every few months about lenders, whether it's in the mortgage space or whether it's in other spaces, where they're getting false pay stubs or they're getting false documents, and they find that maybe they're even ordering these off of a website somewhere and using those to try to get a loan. And that's a big risk to all of us in the financial service space.
Absolutely.
Fraud continues to be a problem, and so when you know you have a trusted source that's getting the data from the actual source of where that data is being generated, and delivering it securely to you and doing it in a very methodical and procedure-oriented way, you know that you're protected and you can trust what you got. And that is another real differentiator in the space as you bring digital income and digital employment to the lending process. It's that trust. And so it's not just the Work Number. There's other players out there that are also providing similar services. But the real quality is knowing that from point A, when that data was originated to pay an employee, to the time you receive it as a lender, that it's been secure and it's been properly managed and it hasn't been manipulated, because otherwise you're taking that risk. And so that's one of the things we take a lot of pride in, is make sure that we're getting that data exactly as the employers generated it originally, delivered to the lenders in its same form.
Well, that trust you talk about is so very important. And because, like you said, the digital data is great, but it's got to be accurate. It's got to be compliant. It's got to be trusted if lenders are going to be able to use this and really benefit from that. Joel, what are some of the other things you see on the horizon for the industry? Is there other friction points that maybe technology can help? Is there other data sources that, these lenders are looking for to improve the borrower experience?
Well, I'm probably out of line. I would say a lot of the lenders right now are possibly hoping just to get a bunch more houses on the market. I don't know if you've tried to find a property these days, but that may be one of the things that if we could all hope together and hold hands that we would want to come true, is that all of those out looking for a house could find one that they can get, that can afford, and that we can help them get a loan for. But besides that, I think it's that further evolution. We talked about the point of sale and that application and automating the closing process. So many of the lenders are down that journey right now. But from my perspective, I think we're going to see that journey continue for the industry for at least 4 or 5 more years as everyone figures out what is the optimal path and how to continue to proceed down that. I also believe you'll see some new products coming to life this year, or I'm sorry, in 2022, 2023, that are going to help those thin file or lower credit folks secure that loan. I think that as we move away from the high volume refis of prime borrowers, that lenders will be working together to help find new products to help those that aren't a full prime or super prime borrower still get into a house and do it in a way that the lender knows it's safe and less risk to them.
I think those are great insights. And Joel, you and I could go on and we could talk for hours. You share so many good insights and perspectives. I know our listeners are going to go back and listen to. If they want to find out more information and discuss some of the topics that we talked about, or if they want to find out more about the Work Number, what's the best way that they can go about doing that?
Well, they can, of course, always just go to the Equifax.com or the worknumber.com websites. And if they want to learn more, there's a number of different ways that they can click through to get in touch with someone personally, or just at most of the conferences. I know that my sales team is very excited that conferences are starting to actually be eye to eye and hand to hand again. And so if they are starting to venture out to any of the Fintech or mortgage or housing conferences, there's a good chance they'll find an Equifax booth there, and we'd love to talk to them and help them in any way. In today's world, it's not really about selling the products anymore. The Work Number's been well known for a while. It's more about the conversation you and I are having here, is how do you use that data in the most efficient manner, and how do you do that to optimize your internal operation effectively so that you can do more with less. And those are the conversations we really look forward to having with clients and prospective clients.
Outstanding. Everyone, you heard that. Stop by the Equifax booths, see them at the shows. We've got the MBA annual in San Diego coming up, a number of other conferences. Joel, you are a wealth of knowledge and expertise. You are welcome back anytime. Thank you so much for joining this episode of the FinTech Hunting Podcast.
Thank you very much, Michael. I enjoyed it.